but I think we can head to 50 trillion. That means Bitcoin, in my view, can go up to $1 million. It'll be $20 trillion of value. So I think that's where Bitcoin's heading. And then you have 10 trillion for the altcoins and everything else. And then you have, I think 20 trillion will be all the rest of the businesses, the projects, everything that is involved in this move of value on chain. And that's how I get 50 trillion. Some people would say, oh no, Bitcoin's going to be 50 trillion, but that would put it at a $2.5 million price tag. That's 25 times today's price. I mean, maybe it could. I think a 10x in 10 years is a lot more reasonable.
Dan Tapiero outlines a bold vision for the future of cryptocurrency, projecting the total market value to reach $50 trillion. He predicts Bitcoin alone could achieve a $1 million price tag, driving $20 trillion of this valuation, with $10 trillion attributed to altcoins and the remaining $20 trillion encompassing on-chain infrastructure and projects. While some forecasts seem ambitious, Tapiero argues that a 10x growth over the next decade is realistic, emphasizing the transformative potential of blockchain in global finance. The crypto ecosystem, Tapiero explains, is at a pivotal moment, bolstered by significant macroeconomic shift. Developments like the approval of Bitcoin ETFs, policy changes under the U.S. administration, and easing global monetary policies are catalyzing institutional interest. He highlights that the U.S., by embracing blockchain innovation, is positioned to lead this digital revolution, while Europe risks falling behind due to overregulation. These shifts are driving optimism for Bitcoin's climb toward $180,000 and beyond. Global economic trends further strengthen the case for cryptocurrency's rise. As fiscal tightening and monetary adjustments reshape traditional markets, digital assets emerge as a haven for value transfer and innovation. Tapiero underscores that the convergence of AI, blockchain, and decentralized finance will drive unprecedented growth, positioning crypto as the cornerstone of the next era of wealth creation.
The summer of 23, when Larry Fink changed his mind about Bitcoin and said BlackRock was going to come with an ETF, that was essentially the end of the bear phase. I mean, it really bottomed after FTX in Q4. And then, the release of all those ETFs in January of 24 and the Trump administration change, I keep saying that the Trump change of view and approach to our space is the second most important event in the 15, 16-year life of Bitcoin, cryptocurrency, blockchain, Web3, digital assets, whatever you want to call it. And that's because we've never had a government be supportive in the way the U.S. is. And not only that, it's that the U.S. is the most important, wealthiest country in the world. And, they have a mission now, as stated, to become the world's leading cryptocurrency blockchain hub. I mean, this is mind-boggling. This is part of their platform. 9 months ago, companies in the space, all sorts of projects were beleaguered, literally beleaguered, being attacked by the SEC, being sued for this thing or that thing. And then all of a sudden, new administration, and those suits have been dropped. I mean, it's pretty incredible. It's the most, dramatic 180-degree change in a view that I can think of, certainly in my lifetime, but I mean, in the financial markets. And what's happened is that the credibility, the trust that sometimes is lacking in our space, you have characters like FTX, doing damage, but the trust that, that we still need to regain in the space, I think that the Trump's move and their platform has brought a lot of that trust, back. I would say. I mean, I'm not in love with the whole meme coin thing that he did. I understand it, and I think it makes some sense. Maybe to discuss at a different time, but the reality is that Bitcoin at 100,000 with these positive developments. If the short interest rate, which is 4%, were at 2, for instance, I think Bitcoin would probably be at 200,000. The economy is slowing. You asked me about the U.S. economy is slowing. Inflation is not a concern. I'm not sure what Jay Powell is doing. I think Trump's view and Bessent's view is right. Bessent said hey, the 2-year is at 3.79, the fund rate's at 4.25. He said the 2-year is telling the Fed what to do. And that's exactly right. I think that the data is slowing down enough that we're going to have an interest rate drop down, hopefully below 3 on the Fed funds. The 2-year will lead it there. But look, we've also just had a 10% drop in the dollar against the euro, and that's helpful. I think the dollar is probably entering a bear phase. I was wrong on the dollar earlier in the year, and last year I thought it was going to be very strong. But the reason I've changed my view is because the fiscal policy that they're taking on, okay, the Doge, not just eliminating whole government offices, but reducing the spending in those government offices, plus, the tariff situation, which acts as a fiscal tightening, that needs to be offset by some sort of monetary offset to keep things in balance so the economy doesn't have too aggressive a pullback in liquidity, in demand side drivers, right? So it's like fiscal policy has been contributing to demand and now it's not. And I think monetary policy needs to offset that. And the dollar is already sensing that. And that's why it's weakened. I think last thing we say, ideally, in a perfect world, Bessent and Trump or whoever should have gone down to Jay Powell and said, hey guys, we're going to be undertaking the greatest fiscal tightening of the last 50 years. Give us some slack on the monetary side. Like, hey, let's work together on this. That would have been, and maybe they did do that. I don't know. But Powell, for whatever reason, is really holding back here. And I think he's, the next few months, the data will just, confirm that he needs to move. And that'll help Bitcoin and the whole digital asset ecosystem, ETH, Solana, the whole world sort of take off again. Because there is a part of our world that is driven by this liquidity from the old world, right? Regardless of the good fundamentals that are relating to Bitcoin, regardless of the good fundamentals relating to some of the other projects and, the activity in the space, the growth of DeFi, stable coins, even NFTs might be coming back a little bit here. So I think you just have a little bit of liquidity from the old world come in. You have Bitcoin head up to, my target has been 180 for a long time, like the last, since the bottom, really, that was sort of my target. But most guys on X are telling me that I'm way too conservative. So, what can I tell you? When the VIX was at, what did it get to? 50, 60?
Yeah.
That priced an extreme moment of fear. And I would say, acted as the sign, the signal to the authorities that, okay, things are too tight. What happened? 2-year goes to 3.79. The dollar drops 10%. The markets themselves act as self-regulating mechanisms. They're self-correcting. So I think that action, that the market action started to ameliorate the fiscal tightening. And that's why Bitcoin also started to improve, because that was the sign, as you remember, Powell kind of softened a little bit. Trump softened a little bit on the tariffs in China. The markets told them, okay, guys, you went a little too far too quick. Now, I know Paul Tudor Jones came out yesterday and said, oh, the markets are going to go back down because fiscal policy is too tight and monetary policy, he's sure Powell's not going to ease. Well, Paul is one of the 2 or 3 greatest macro traders of all time. So it's hard to take a view against him, but I don't see that happening. I think that was it. And maybe we have a retest, maybe something happens, but I think pretty much that was the extreme. The markets priced it in. I think the unemployment rate going from 4 to 5 is good. And the unemployment rate going from 4 to 7 is probably not good. Right. So it's about degree and extent and speed.
Gotcha.
But I think we're on plan for like a slow slowdown, right? I don't see, China's been slowing. And then don't forget the rest of the world, which many Americans do. China has been slowing much more severely. They just cut interest rates 2 days ago. I put a tweet out there on that. Now their short rate is 1.3%. So 1.3, imagine if the US were 1.3. Bitcoin, could be 200, 300. I don't even know. But they're really concerned, of course, that the tariffs impact them more. Remember, trade is a sort of smaller percent of what we do. So they're concerned. The ECB has already cut interest rates, right? Was that a month ago or 2 months ago, whenever they did it? So that's the rest of the world economy. They've cut. And also that's supportive of liquidity, global liquidity. And that's also supportive of Bitcoin. So some part of this recent rally is also that other central banks have acted.
Dan Tapiero predicts the cryptocurrency market could reach a $50 trillion valuation, with Bitcoin hitting $1 million and significant growth in altcoins and blockchain infrastructure. He foresees a 10x expansion in the next decade, fueled by blockchain's transformative potential and rising adoption of decentralized technologies. Driving this growth are Bitcoin ETFs, evolving U.S. regulations, and increased institutional interest. Tapiero highlights the U.S.'s opportunity to lead the digital revolution, warning that restrictive policies could leave Europe behind. Cryptocurrencies are positioned as a growth haven amidst traditional market challenges.
Let's watch more clips from the interview.
Look, obviously, Bitcoin doesn't have a geography attached to it, doesn't have a fiscal policy. There is no government. It's independent of all governmental, tips. So if one government is unhappy with another one, maybe it impacts the currency, maybe it impacts the underlying economy, but Bitcoin is outside of that. So yes, it's helpful in that sense. But in the other sense, to me, I just see it as I said, fiscal, not austerity, but fiscal tightening. It's a damper on growth. If there's going to be more of a tax on a certain consumer product, maybe that reduces the demand. Also, importantly, it creates uncertainty. So people just don't know what to do. Mm-hmm. And uncertainty slows growth. So that's another thing, right? Uncertainty in and of itself slows growth. And slowing growth is what we want, right? So that Powell doesn't have to worry about non-existent inflation. There are a lot of companies that aren't really tech savvy, so they're probably going to have a problem. Mm-hmm. I think people that think the U.S. stock market is going to start to underperform other stock markets, there's no chance of that, in my view. Most of the places around the world are not as tech advanced or as sensitive to introducing new tech into processes. So, I think China can do quite a lot, in the robotics area, but they don't really have a stock market. I mean, they, in the sense that people don't really trust their assets. When you make an investment there, investors don't know that your money is your money, right? If people can disappear in the middle of the night for 2 weeks, who run large companies there, foreign investors don't want any part of that. So, China can probably, in a massive way, adapt, this robotic AI agentic future. Europe, I think, is way behind. I mean, just in our space, look what happened. Tether decided yesterday they're exiting Europe completely because of these MiCA regulations. I mean, think about how phenomenal that is. They're exiting a whole economy that's the same size or maybe a little even bigger than the US because they don't want to be subject to those rules. That doesn't seem like a tech forward kind of place to be. And so the people who are getting left behind, it's massively deflationary for them too, because they get crushed. And then the people implementing AI, their margins explode. Mm. And so, look, I think it's exciting and it interacts with blockchain as well. I think AI and blockchain, all these agents out there, the move to, the move for the analog world to the $800 trillion in assets that is out there in real estate, in bonds, stocks, all of those things is all eventually going to be put on chain. And I think eventually all of it will be fungible with each other, be tremendous opening up of liquidity, many assets that are illiquid, the whole movement into, RWAs. I think it's happening. It's still early. And then that will be integrated with the whole new world of cryptocurrency and decentralized networks. And I think they merge. And I think AI is going to, help make that happen. Also, I think AI is very obvious and speeds up the development of the blockchain world, because just think about like how difficult it is to move, I don't know, coins around in DeFi and all the different things you can do in DeFi. I mean, if you're a civilian, just a guy out there who doesn't even own Bitcoin, DeFi would like blow his mind. But the people who are active in DeFi are super tech and AI focused. So I think you get lots of applications of AI in the blockchain Bitcoin world, because frankly, in my experience, I mean, those are the smartest people I've ever come across. Not the 23-year-old pump and dumpers of meme coins, but I'm talking about, the guys out there building new chains, the guys running these major companies, Brian Armstrong, Arjun, at Kraken with David. You have, some of the larger companies, Mike Cagney at Figure, Pascal at Ledger. You've got guys who are running really big businesses. And I think, by the way, many of those businesses are going to become public in the next, 12 to 24 months. I think the US, as I said before, becomes the blockchain crypto capital of the world by encouraging all these companies to list on the NYSE or on NASDAQ. And I would hope within 2 to 3 years, we've got 30, 40 companies. Maybe they're not as large as Coinbase, but today Coinbase is the only public crypto blockchain company, I mean, of any significance and size. And so I see a migration of those companies, foreign and domestic, to get listings. I think it gives them huge credibility. And it also allows the traditional world access. It gives them comfort to buy, right? Because they can buy equity. Americans love owning cash flowing, successful businesses. They're not going to, harder for them to jump into a Punk or a Bored Ape and all of that kind of thing. It's just, it's a little too degen for them. And I focus on there's 800 trillion in assets, and the digital asset ecosystem is worth like 4 trillion.